The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to start out the show like we usually do, and that is to take a look at the DAX index. As we can see, it had a sell-off, completing an ABCD pattern. And also, we'll look at the FTSE in just a moment, but we should take a few seconds here to say a little white light prayer for Billy Graham passing away at the age of 99. That fellow probably had more influence than anybody except the Pope. He was very well liked here in the United States. I never did get to meet the guy, but the family used to watch his Sunday shows, and we were Catholics, but we still like to hear his message. Anyway, let's move on here to the FTSE index. You'll see the same thing with the FTSE, only this has been down a lot from that ABCD, of course, but at least it's starting to show some type of a bottom here over the past day. Now, whether that's going to mean much or not, we'll have to wait and see. We have confirmed, this is our second trading day coming back from the holiday. We've confirmed that those fib numbers that we hit on Friday were pretty much spot on, because we've come off more than 500 almost 500 points in the Dow Jones and quite a bit in the NASDAQ and the S&P. Now, they could go back and take those out. That would make it pretty good importance to see this thing moving, going higher. So we'll see what's going on. Okay, let's move on to something else that we need to talk about. I wanted to bring up something about, let's do the Bitcoin first. We've had so many questions about Bitcoin this morning. We're going to look at Bitcoin two different ways. The first way we're going to look at it, and if I can find it, please help me find it. Shut the front door and raise the rent. I can't find it. Doggone it. I wanted to show it to you in terms. I did find it. Hold on. It's right here. This one comes from our good friend, Kerry Szymanski, and Kerry does a lot of pattern stuff, but he also he follows the Elliott wave. He lives here in Tucson, and Bob Miner lived here, and we all used to meet together twice or three times a month, and we would talk about different things. And Bob was big into Elliott wave, and of course Kerry worked for me, and he was interested in patterns, and Kerry still follows the he doesn't follow it exactly the way some aficionados do, but if you'll take a look at this, you'll see here that we've had two major corrections here. You'll notice the first one that we had way back on December. The market rallied quite a bit. That was the rally back after it hit 20,000, and now we've completed the exact same pattern. You'll notice that if you drew the parallel channels in there, they would be spot on, and that's basically just showing you the repetition of the market. We hit 12,000 up here in this Bitcoin index, and so we're due for a correction. How much of a correction? This is going to tell us what the next leg in Bitcoin is going to be, because if this is a C leg that we just completed yesterday, this is a 4-hour chart, we could be looking at Bitcoin down around 2,000 without any trouble at all, because you go from 17 down to 16, that's 11, and if you take 12,000 from 11, guess where that takes you, boys and girls? It takes you down to 5. No, it takes you more than that. 11, 5. Yeah, about 4,000. So you could be looking at a big, big correction. Now, the other way that we like to look at it is if we take Bitcoin and look at it with all the patterns that we've lined up, you'll be able to see where we are here quite easily. We've completed, when you look at these arrows on the far left over here, these are the harmonic swings that Bitcoin has had since we started looking at this thing. This, by the way, comes from one of our friends across the pond over in Denmark that does a lot of work on Bitcoin and does a lot of trading with Bitcoin quite successfully, I might add. And you'll notice that these swings are repeating as it goes through, and we just completed. If you look at that, it's not drawn in yet because I haven't had a chance to draw in the ratio, but we just completed a 382 ratio from the high, back in January. Now, what that means is if that's all we've got is that little ABCD there, you're looking at something that could be looking at a little bit, a little bit scary from the bullish side. In other words, it could be very, very bearish. So watch that. It's something that deserves our attention. Now, I've had a question about cycles, and since the Hang Seng, the Hong Kong market, is in the news. In fact, I'm getting ready to go over there to do our annual talk, and we enjoy this every year. Sarah and I get to go over to give a speech, and we have a lot of friends there from China and Hong Kong that it's really a lot of fun, and we enjoy it very much. I'll get into that a little bit more later, but I wanted to talk a little bit here about this Hang Seng Index, if I can get it up here. There we go. Now, I put the cycles in, and all I was doing here, if you'll notice the cycles on the top, all I was doing was taking from cycle high to cycle high to cycle high, and then I was taking the smaller cycles, which were the 77-day cycles, and then I was looking at the 144-day cycles to see that they came around the time of the new year. And that's, well, it was actually the 29th when we had the solar eclipse and new moon. And now what we're looking for, as you can see, is a bounce, which we're getting here in the Hang Seng Index, and we'll see if it's going to be able to do anything. But if we go below that level at 28,850, that's going to be a very negative sign, and we should be looking at a pretty severe correction in the Nikkei, if it does it. But what I wanted to mention to you about the cycles, and this work was done by James Hurst. He brought out the book, The Profit Magic of Stock Transaction, 1970, with McGraw-Hill. At the same time that he was doing that, William Garrett from Hawaii, a former broker for Walston and Company, brought out a book called Torque Analysis of Stock Market Cycles. Both of these gentlemen was engineered, but Mr. Garrett was very heavy into the esoteric numbers of sacred science and used those numbers to work with cycles, and that's really the cycle book to look at. But the popular book was Hurst's book because it only cost $8.95. And I believe the Garrett book was either $19.95 or $29.95, which was a lot of money, back in 1970. And one of the people that was interested in Hurst's work was a guy named Ray Frechette, and he started a company called Cyclotech, and he would do all these types of cycles on the charts for you, and you would get these by special delivery on Saturday morning of all the commodities that we're looking at. These were very large charts, 11 by 14, and we planned our trades on looking at these cycle bottoms coming in, not knowing diddly squat about Fibonacci numbers or anything like that. My first introduction to Fibonacci numbers was in 1971 when we were up in San Francisco. I met my mentor, John Hill, there. We spent a great deal of time together. I went to Hendersonville, North Carolina, spent many, many days there studying Fibonacci and a lot of other things too. Anyway, we'll take a little break. We'll get back and we'll finish this cycle work. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
It's a special month at TFNN, and with market volatility back, we've decided to hold an open house in our Tiger's Den. For this month only, you can get a full 30 days of Tiger's Den membership without paying anything. The Tiger's Den is our interactive chat room where you can chat with other tigers and tigresses along with the TFNN hosts during each of their programs. For all of the details and to start your 30-day free trial to the Tiger's Den today, visit the front page of TFNN.com before this deal is gone.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and it's good to know that the FOMC, Federal's Open Market Committee, is doing their thing at 2 p.m. today. And a lot of times you'll see a lot of activity around that time, so keep in mind that that is today. Getting back to these cycles that we're looking at here in the Nikkei is that the problem with static cycles like this is they usually work about 2 or 3 times, and then they start expanding and contracting. And that's really what the market is doing all the time. It's very seldom is it static. It's usually expanding and contracting, and that's where I switched my astrology from cycles into the astro stuff, because we had spent some time in Pittsburgh at the Foundation for the Study of Cycle with Gertrude Shirk and Edward Dewey, and he was really heavy into it, but it was so over my head back in 1976 that I really never paid too much attention to it, and it didn't really come back to be reviewed until I was at Drexel in 1978 when I met Mary Rivers, the silver lady that you folks have read about in my book. Anyway, that's what cycles are all about. It's like everything else. It's probability. There's nothing more than that. That's really what you're looking at. What I would like to do now is to, someone's asked me, what do I do when I go over to China? And what we try to do is we try to give the folks some really good ideas for trading. That's the main purpose of going there. And when we do that, we try to pick a special situation trade that will allow them, to make some money off of this. And I am going to show it to you right now. This is the one. This is the one from 2016. The one from 2017 was the gold trade. We were very, very bullish gold. Down around that 1030 level, and it turned out to be a really good trade. But let's just take a look here at this was the trade, and this was an unusual one here. No, I never did know that gentleman, Mr. Z. I didn't know Phil Cavato. I never really did. Sorry about that. Anyway, let's take a look at this. This is Amazon, and if you look at the date here this was March 21st of actually it was March 19th of that was a Saturday of 2016, and we were all together there, and we were looking for a pattern that we could, possibly hold for a while that would yield a very good profit. And so what we did is we went through the total analysis here of Amazon back in 2016, and as you can see here, we were completing a beautiful ABCD pattern right at the 382 retracement. You can't ask for anything more than that. Gartley said in his book, buy the first ABCD correction in a bull market and sell the first ABCD correction in a bear market. Page 222. But anyway, that's exactly what happened. And so on the trading day, which was that following Monday, the market opened down very nicely, down about 9 or 10 points at 538.39. And at that time, we were buying the 550 May puts. Let's try it again. The 550 May calls, and they were, it was very reasonable in price. I think they're around 11 or something like that, and away they went. And we followed this trade all the way through till Amazon hit about 800. But if you'll notice, back in July, on the 28th of July, we were making that exact same pattern. It was, if you look at it, it's a 382 retracement off the previous low, and that was a 382 off of another the previous low, and all of them were ABCD structures. And this one in July of 2016 was another one, and that's the one, the 681 that took it to 1200. And so that's the kind of thing that we do when we do these seminars, is to walk through the whole trade, systematically, not knowing anything about the fundamentals, just looking at what the pattern is doing, with our main focus, being on risk control. At this particular time, because the stock was, trading at 500 and change, it was best to, use the options market. And because the market had been down, the option premium had dissipated quite a bit, so the premium on the calls was actually very good. Anyway, that's part of what we do. We spend the whole day. This year we're going to be looking at some things related. We've got some really great research coming from some of our friends in the UK about the opening price and how well it works in certain markets. And it's really amazing, the things that I think I know, but I don't really know. And that is that the opening price, the variation on when you pick the opening price for the foreign exchange markets is very, very important. In the UK, around 8 o'clock in the morning is when most of these big banks are really going. Now, they're open all night, of course, but the orders start to come in around between 8 and 9 o'clock in the morning. We've been to Nomura's operation there in fact, they're closing that thing. I can't believe it's a brand new building right on the Thames River, and they're just closing. And anyway, we've been there several times, and that's where the big foreign exchange operation is. I've also been at the one at Citibank. This is about 12 years ago. The fellow that built that Citibank operation, he built the floor. He built the currency floor where there's 300 traders, and they start around 8 o'clock in the morning. What they're doing is they're booking orders, for tractors and planes and automobiles and trains and everything else. So that's how it all starts, and it's real money out there. So these foreign exchange markets react very strongly to the opening price. And what we're finding is that by changing the opening price by half hour, sometimes 90 minutes, it changes the probability of the trade by as much as 25%. And we're going to be sharing these statistics with you over the coming weeks and months. But it's certainly exciting to watch it unfold. Also, we're going to be talking about the cryptocurrencies. One of the famous cryptocurrencies, the new one, is called Cardano, and it's the symbol on that is ADA. It sells for around 50 or 60 cents a share. Well, one of the people that started with Ethereum that sells for $1,500 a share, a man named Charles Hoskinson, is in Hong Kong, and we're hoping to get to meet him and see what his views are and stuff like that. And those are the things that I'm going to be, looking at. Okay, let's move on to, by the way, Rich Anderson will be our guest tomorrow, and we're going to be talking about the grains and we'll see what's going. I believe Ethereum's around 1,500. I don't really follow that one that closely. I follow Bitcoin and Cardano a little bit, but believe me, this is a learning process with these things, folks. And I've never traded one share of these. I know my good friend John Jameson, does it, but I really don't. Ethereum is 872 now. Wow, that really backed off a lot. Holy cow! Last time I looked at it was 1,500. That's a 50% drop. 850 in Ethereum? Wow, that's a real drop. Is that correct? Well, two people have just told me that that's correct, so that must be it. I hadn't realized that it sold off that much. Anyway, we'll be looking at some of these things down the road because it's like the internet. The internet started in what, 91, 92. It didn't get popular until 95, 96. So we'll see what happens here. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I would like to bring up a chart. We've had a question about Amazon. Where do I think it's going? And we posted it in here in the room, and it'll give you a really good example of what the importance of that bottom that we had back here after the first week around the, well, it was actually the the 7th. Anyway, you'll notice that we had that beautiful ABCD pattern completing absolutely perfect. It was a perfect ABCD pattern, finishing at 1266. That also happened to be a perfect 61% retracement from the last 7-day correction back on December the 4th. And if you did the work on the ABCD structure, that would have also been a 382 retracement from the low back in September. That's why it's been so powerful. And as you can see here, we're not very far away from the old high. We're way above the 78% level. So there's nothing bearish about this stock at all. I mean, the ABC structure on this, if it goes, could take it to 16, 11, 12, to another, they could take it to 1700 without any trouble at all if it's that bullish. Now, there's a possibility that this could be a double top. That's the other possibility, so you have to look at it. I think the only way you can trade this is if you go down to a 30-minute or an hourly chart, and because the price is, usually out of the realm of most folks short selling or buying at $1,400 a share, you would look at the options, and I would go out, at least a couple strikes so you don't have to risk an arm and a leg. But the market has so much volatility for our Amazon that it really makes a really big thing. I don't know if you folks know anything about the Amazon culture, but I was exposed to a little bit of it a few years ago. If you all remember my good friend Mark Douglas up in Scottsdale, he had a neighbor there that ran the Amazon operation in Phoenix, Scottsdale area, and this fellow was from Eastern Europe, a really nice guy. He had a lovely family. He had a little daughter who was 4 years old, and she was a real savant. Oh my gosh, she was really, really talented. But he had worked for Bezos for just about 10 years, ever since he had. It was his second job out of college, I believe, and he would tell us about, how there's a lot of pressure working up there, folks. There's a lot of money, but there was a lot of pressure. And the one thing that the folks in the upper echelon management did not want, and that was to be Bezos'd. And to be Bezos'd means that you got a private email from Jeff Bezos himself, and you didn't want to get that, because that means he was very upset about something and he wanted a response ASAP. So even though the money's great, there's a lot of pressure. The same thing is true with Microsoft. So when you see these things, these guys making this kind of money, there is a lot of pressure involved, as we know. And given the fact that the environment's going the way that it is, there's going to be some political pressure on some of these companies like Facebook and Twitter and other places where they do this social networking. There's got to be, well, let's get off the soapbox. Let's forget about it. Let's get to the gold market. Folks, we've broken down below that really key level at the 1238 level, and we're bouncing back up towards it again, but gold does not look bullish. Silver's already broken down, so the best thing to do is wait. If this is the bottom, my hat's off to it, but I don't think that it is. It's broken below the key support that I've been watching for quite some time, and I really don't think that it's got a chance to go. This was yesterday before we had the bigger break today. And you'll notice that we're still heading down, to see how it's going. Anyway, we'll be watching it as we go. Anyway, there's a little talking here in the den about Mr. Bezos himself, but he is the richest man in the world, they say. And gosh, when you stop and think, 20 some years ago, he was working out of his mother's garage selling books. Things change in 20 years. Amen to that. All right, let's move on and take a look at one other chart that we wanted to discuss today. And that is, hold on one second here till I get it up here. And that is this euro. I want to bring it up here because we have now backed off more than 250 pips off the high. That is, very good, Dollar Bill. Dollar Bill is saying, what is a book? Well, a book is Kindle, I guess. I've never done a Kindle book or anything like that, but the book business has certainly changed. Boy, it really has. Anyway, we look at this long-term weekly chart. We most probably made that 61% retracement up there right near the 126 level. We missed it by about 55 pips, but right now it looks like it's pretty important because it was the 1.618 expansion off of the high in 2015 and the 61% retracement of the high from 2013. So this could be very, very interesting here in this, because the dollar is potentially had major bottom down there that we've seen so often at this 88 level. Now this is important, and this is one of the reasons why we'll have Rich Anderson on tomorrow, is the supply demand for these grains is dependent on, if the dollar's weak, our grains are selling at a cheap price and they buy more. Well, the problem is, as Mr. Z has been telling us now for well over a month, I believe, that there's a huge drought in Argentina. And if you take a look at the map of South America, you'll see that Argentina, next to Brazil, is one big place. And it is really heavy for soybeans. It really is. I was fortunate enough to go to Buenos Aires back in 1993, and it is really a beautiful place. But Buenos Aires is as close to Italy as you can get without being in Italy. That's just like Italy. There's so many Italians down there that it's just like you didn't even leave Europe. So, but anyway, it's a beautiful place, and they're having problems with their soybean crop, and that will affect the rest of the world. And if something happens that we have a problem with our soybean crop, the soybean crop has an inelastic demand, folks. And what that means is, comes from our good friend Paul Samuelson. An inelastic demand is, it doesn't make any difference what the price is, people are going to buy it. And Amazon's a perfect example of it, I guess. But that's really what it's all about. It doesn't make any difference what the price is, people are going to buy it. And well, anyway, that's neither here nor there, because soybean is nearly a perfect product. It's protein and fat. Protein is your soybean meal, and your fat is your oil, and the oil is used in paint and margarine and just so many other things. So it is a big deal. So we'll see what's going on. But we have a pretty good move going in these grains. And oilseeds haven't moved much yet, but the corn has moved, the wheat has moved, the beans have moved quite a bit. So this just started, and we haven't even begun planting in the U.S. That won't start until early April. So it's going to be really be interesting to see what's going to happen here. Well, Mr. Z, Bob, let me tell you, Mr. Z in the room has been talking about this big move in soybean meal for quite some time, and that was one of the things that I focused in the letter, is the fact that how bullish soybean meal looked. This goes back. I'll put you up to date on what the let's get it up here, take a look at it, and then we will get going here. 1 second here. Oh, I'll put it up after the break. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, folks, we're going to take a look here. We'll start out with the daily soybean meal. These are charts from the weekly newsletter that I do for futures. And you'll notice here that we made that really strong last support early January in the meal. It was right at the 61% retracement. These are the types of charts that I send to Simon Lee each day in the grains and oil seeds to give him an idea of what the technicals look like. He knows the fundamentals better than just about anybody. Between him and Rich, it gives you a pretty good idea of what's happening. But this is the daily chart that you're seeing here. It's been a big move here so far. By the way, we will have Simon Lee on after this drought thing slows down a little bit, but he's busier than a one-arm paper hanger, given the fact that these things are moving around so much. Now, this is the daily chart for soybean meal, but what I wanted to bring to your attention here is the fact that we do have a situation on the weekly chart that's going to be interesting to follow too, because we've had a very, very, very big run here in the meal here. It's ran it's ran $100 a ton. That's $10,000 here, since September, and we are coming into some resistance here at this 61% retracement here at this 381 level. But if you'll notice, 2 weeks ago when this really started to happen, we left a gap up at that 350 level that I think Mr. Z was certainly talking about in the room, and we were talking about it because that was a really big gap and a really wide-ranging week. And so that's telling us that this market probably wants to go a whole lot higher. The ABCD structure on this from 2016 and 2017 could take you to another $100 a ton higher to 470. Well, you think that can't happen? Just go back and look at 2016 and look at the low there, folks, in February. You see that low? 2016, bada bing, bada boom. What happened? Away it went. Look at the high in 2017, February. So February is a key month. So we'll watch it very, very closely. But right now, we're right at this 61% retracement. It's got to keep moving in that direction. Otherwise, it could be topping in here. But again, it's a little bit dangerous given the fact that you have this really wide-ranging bar, on the weekly basis. Just look at what happened to wide-ranging bars back in 2016. You don't have to catch a falling knife, folks. Play mumbly peg. Wait till it hits the grass and then pick up the knife. That's the easiest way, take a look at it. But the grains are holding up pretty well. Mike from Toronto is asking whether he should buy wheat in here. You can buy anything you want as long as you use a stop. The chart looks good. The chart in corn looks good. All of them look good. And so what you have to do is decide how much you're going to risk. It's how much, not how much money you make. It's how much money you don't have to lose. And that's the key thing, to be watching. So very, very important for sure. Okay, I'm sorry if from Safety Harbor. I thought that was Mike from Toronto. Well, it's a lot warmer where you are, that's for sure. Sorry about that, Mike. Okay, all right, let's move on to the next thing that we wanted to talk about, and that is the stock market. We had the big break yesterday, which not big. I mean, what do you, a couple hundred points in the Dow's nothing anymore. It jumps around 100 points in about 10 minutes. So that's not really anything to look at. But the fact is that on Friday we hit that major 61% retracement in just about everything. And we'll put this up here for show you the New York Stock Exchange Index. And we'll get this up here to see it. And we're going to see if this is going to be the big ABCD correction. And we're going to be in some really good volatility here for the whole rest of this year and maybe for a very, very long time. One of the best trades over the last 8 years has been selling volatility, and that might be changing. So we'll see. So far, we've had a high of 50 into the January, the first week of February, and I believe we're going to take that out without too much trouble at all. So those are some of the things that we're looking at. One of the questions someone's asking this morning is where do we buy gold? Folks, we've broken down in gold. It's had some really serious problems here. If we take a look at this chart on the daily gold chart and look at it just a little bit, and this is where we were Friday. I just want to show you, this is a 3 drive to a top pattern that we had on January the 29th. That was the lunar eclipse. Then we had the solar eclipse. Look at the double top. There's a potential for a triple top up there at that 13. We hit 1362. 1366 and 1365. That's a potential for a triple top. And folks, we've already been down to 1329 in the first 2 days. That's not a good sign. The next major support in gold comes in at $1,300 an ounce. If you'll notice the old highs there from November, that would be your first place to look at it, and that would be a very interesting retracement. It would be 50% off of the low that we made back in December when everything was, screaming buy, and now it's not screaming buy right now. If we ever get above 1370, it'll be screaming, of course, because when you take out triple tops and triple bottoms, given the work of W.D. Gann, it is telling you that Katie bar the door. You do not want to stand in front of that one. That's for sure. And remember the famous words of Larry Williams, in the land of the blind, the one-eyed man is king. And when you break out these triple tops and triple bottoms, you don't want to be blindsided, because that really means that supply and demand situations have changed very, very dramatically. One of the reasons why, this silver, or that why the gold has looked so suspect, is the fact that, the silver, even though gold was making new highs, look at the silver chart, folks, on the daily. I mean, it was at a 78% level when gold is making a triple top going back from 2 years ago. So this is a sign that we're heading down at least to $15 in silver. We're trading around $16.40 right now, so I think we got $1.50 or so to go down in silver. Not very much. And if we got there, if you look at this chart, that would be an absolutely Holy Mary 3 drive to a bottom pattern that you couldn't believe, from December to July and July to December and December, and that should come in sometime around April based on what the cycles are looking at. So that's a longer term one. That's one of the reasons why we were not bullish. We were very bullish gold, but when silver started to fail, we basically stood aside. It was a very good trade from the long side. But now it looks like we're still heading lower. Once we broke that 1336 level, that was telling us that, it really looked like it was suspect. Now, I'm not sure whether it's going to turn from here, but I see no indication of that at all, and we'll be able to see. No, Mr. Bill, the 3 drives is really not present yet in the silver. You have to be. It's got to get down. At least on the weekly chart, it's got to get down to that around $15
an ounce. Anyway, if you have extra money, folks, and this is something that I've always recommended, is to buy a few silver rounds. They're beautiful coins. They're 1 pure ounce. And they're beautiful for teaching purposes to kids. And you can also buy silver dollars for under $20, and those are another one that they'll be going out of existence in the next 10 or 15 years probably. So we'll see how this works. We'll take a break here. 877-927-6648.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. Last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I've been asked to take a look at the Japanese market, the Nikkei. If you'll notice here that we did hit a big 3-drive pattern here recently. And if you remember, the high in 1989 was 39,800 and something. We went all the way down to 7,000. So what we're looking at here is a very, very nice retracement at the 61% retracement. I'm going to give you a hats off here to our good friend Norm Winsky. He publishes a thing called fractal analysis that gives you an idea what the markets are going to do in the future. Folks, take a look at what Norm has done. Contact Norm Winsky. You know his information because we have him on here at least twice a month. But his fractal analysis is as good as anything you're going to see for shorter term timing. He does a fabulous job. I've been following it for quite some time, and it is a very, very good way of looking at it. So if you're interested in shorter term timing, daily timing, it's very, very much better than any of the cycle things that I've seen. And when you add it to the astrology that he puts in, it gives you some really key timing dates. And as most of you know, working with Norm, listening to him here, he does a great job. But he does offer this in about 30 different markets. So I'm sure it'll cover just about anything that you want. It's pennies. It really doesn't cost very much at all. So we'll be having Rich Anderson on tomorrow. And one other thing that we want to be talking about is next week, we're going to have Stan Harley on as our guest, which we always like to have. And hopefully if the weather warms up here in Tucson and we don't go into the ice age. It's 32 degrees here up in the Catalina Mountains. Snow in the mountains this morning, folks. So when it gets 32 degrees in February in Tucson, that is chilly. And we have the rodeo here this week. This is the week of the rodeo, all the vaqueros. It's Fiesta de los Vaqueros, when all of the rodeo people come in for one of the biggest rodeos in the Southwest. I'm not entering this year because I won so many years in a row, they've asked me to not enter. So that's it. Live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.